Good morning, everyone. I'm Martha Stokes. I'm a retired buy-side professional, and I'm trying to help you understand the market and what's going on in a more structured way that is more focused on the professional side or on the buy-side institutions, sell-side institutions, hedge funds, and so on and so forth that really dominate the market because the retail side really is a very minor amount, about 20% of all the activity that is traded every day. There's some 350, $400 billion changing hands every single day in the market, probably more than that. Don't check all the time. I want to talk today about the very important market participant group for you. You can't see them. You can't talk to them. They don't report any news. They don't do anything. It's the high frequency trading companies. These are companies. These are not individuals. HFTs are entirely unique in the marketplace. Why? Because it is a program. It is an automated program. And yes, they have in this past 6 or 8 months started to incorporate heavily AI into their strategies and techniques. HFTs have been around for over 20 years. There is nothing new. They started out in the 80s as the SOS bandits. As computers became popular with the um, early adopters who would go and buy a kit and build their own computers, a lot of floor traders were disgruntled and unhappy with their jobs and how the New York Stock Exchange and NASDAQ was always automated, but New York Stock Exchange floor traders were very unhappy. A lot of them left because they felt they could make more money on their own. That morphed into the SOS bandits, which is what they called. And then at the time, there were fractional uh, pricing structure, which made it super easy for floor traders who know everything to make massive profits scalping and that sort of thing in the 90s. Retail day traders heard about the scalping and how much money these professional traders were making, and all over the country they sprung up these little areas where you could go in and you could retail day trade, and everybody on the retail side lost money because they have no idea what's going on. I'm trying to help you learn what's going on. A lot of it may be tough to swallow because you have been pounded and pounded and pounded with false information, misinformation, manipulative information, information that is not accurate at all, and you believe it because you've heard it and heard it and heard it and heard it. One is Wall Street versus Main Street. That doesn't exist anymore. There are many major market participant groups. I talked about that a little bit last week, and they all have their independent focus and what they do, what they contribute. HFTs started as SOS bandits and morphed into the HFTs because all of a sudden the big banks decided that they wanted to squeeze out the SOS bandits. They wanted to get rid of these guys because they were so tired of them front running them all the time and making all this money. And they were angry because they were their employees that had quit. So they went to the legislature, who doesn't know a thing about the stock market. You probably know 10 times as much as any average senator or congressperson, and said, oh, guess what? The retail traders just are really struggling, and they're struggling because they can't do fraction trading. They can't understand a fraction. It's like, I'm laughing because it's like, are you kidding me? I'm sitting in an SEC meeting listening to this garbage, and I'm going, you're kidding me. Uh, most of the traders are men, and men are very capable of calculating fractions. But the legislature believed and trusted the banks, and the banks figured, well, if it was a penny spread or a decimal point, that they could squeeze out the SOS bandits. It failed because the SOS bandits just simply went to the exchanges and offered their services to the exchanges and said, we would like to plug directly into your mainstream computers, and we want to trade on the millisecond, because the penny spread, there was nobody way anybody can make any money. No professional traders day trade anymore because you can't make money on a penny spread. It's just too tight. And if you look at this chart, you see all these tight little patterns, tight, 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 tight. You can't make money on that. You need huge, big gains. And you have a way of getting into that, which I'm getting to very shortly. I know I'm long-winded, but this is important. HFTs were approved by the SEC. They were approved by the exchanges, and they integrated their multi-million-dollar computers and programmed it to automatically do what it was supposed to do, which was make the market liquidity or take market liquidity, depending on the overnight order flows from the brokers. And the brokers were retail brokers who were sending their orders over to the payment for order flow market makers, and HFTs were able to pick up that activity, and they still do today. HFTs are fully automated. HFTs have started using AI. They made huge buco mistakes in the last couple of quarters, and they corrected that. Now they're much more accurate in their assessment of what's going on. The HFT AI goes out and searches on the retail side. What are retail people doing? What are they listening to? What are they trying to find out? Okay. And so then they will slant their orders. They can fill the queues a millisecond or a few seconds before the market opens with orders either to the upside or the downside. Now, all their orders are small lots. They're all small lots, 100 shares, 200 shares, because it's not the size of the share that size of the order that matters. It is the number of orders that pushes the computers who are not AI. There are computers that run the market, and they are not AI, but they are able to detect automatically that there's a huge slot of orders going to the upside or the downside, and they adjust the prices of stocks based on that information in milliseconds. Milliseconds. So at open, we have these huge gap ups because HFTs have gapped up or gapped it down the stock. Now, this one is a really good one. It's DDO and Datadog, which I love. It's cute. So we have this massive gap up on massive volume. This is always, 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 always HFTs. Okay. And the thing is you're going, wow, that really gapped up. I would like to get into it. And you chase it, and then it goes up the next day, and you go, all right, and then it goes up, and then you have a little nudge from the pro traders, but you're going, oh my, I need to sell. Oh, but the next day it went up. Gosh darn, I got to get back into it. Then there's this little nudge from the pro traders that you think is selling, and you're going, oh, I need to sell, and then it starts running up. And so you're making these teeny weeny tiny little gains instead of realizing that once you have a gap up like this and pro traders enter, it's going to often move up. This gap you want to be in before the gap. The pro traders are in right here. They're just going nudge, 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 nudge. And then all of a sudden, boom, it takes off. And they are patient. They're not worried about it. They have option puts on these. If they think they're in a 5 million or 10 million share lot order, they're not worried about it at all. Besides, the stock is bottom, and they can read a bottom, and they go, this is a perfect bottom. Look at all that dark pool activity. Woohoo! We're going to have fun with this. And the stock also likes to gap. Gappy stocks tend to gap. Why do they gap? Why do certain stocks gap all the time and others hardly gap? Well, because it's retail news. You overreact. HFTs hear about what you're doing before the market opens. All your chat rooms are open. Everything is open. So the HFT AI can gather all that information. That's what AIs are great about. Sets up its algorithms, and boom, you have a huge gap up or run up. You need to learn that the HFTs are fully automated, that you need to be in before the gaps. Otherwise, you're chasing the stock. And then because you are not confident with your trading and you have taken a lot of losses and you make a gain and you think, oh, I've got to figure it out. And then loss, loss, loss. Oh, I made a gain or several gains. And then all of a sudden, big, massive, mega loss. You got to stop that. It's not good for the market. It's not good for you. And it doesn't work. You have to be consistently successful. You should have a 75 to 80% success rate where you make a high profit and just 25 or 20% very small losses. You should be using a controlled bracketed order, and you should be trading with the professionals, but you're not. So this is a problem. You need to understand that all the times that there is a huge gap up, you have missed the opportunity unless you are able to manage not to panic in between these runs. This is an ideal pattern. I picked it because it's an ideal pattern. Not always are these patterns this ideal. Now we have this extreme vertical angle of ascent, and we have a warning signal here. We have a warning signal here. That this is the end of the run. It's an angle, 90-degree angle of ascent, and it will not sustain. It's all speculation. So if you wait and hold, and you think, oh, I'm going to I'm going to hold and hold. Maybe you were able to hold, and then you think, oh, it's just another little day, and then all of a sudden, boom, down it goes. You have to understand the dynamics of the market. Once it gets to an angle of ascent, the pro traders take their profits and they're gone. So there's a void of buyers, there's a void of activity, and all of a sudden the stock will move down. It moved down to the support level, so it's going to start this again. It's a very popular stock with the retail group, so why not trade it? Why not have a lot of fun? Gaps are always caused by HFTs. Gaps fill the orders, the queues milliseconds before the market opens. The computers of the market gap up or gap down. There's always huge volume. There's always opportunities preceding that you are missing out on. So learn about all the different market participant groups. There are 14 distinctly different market participant groups. Get rid of the Wall Street versus Main Street. That doesn't exist anymore. It hasn't for decades. So you need to say, which professional group is trading? Why are they trading? What is their intent? And how can I take advantage of it? I'm over budget time, so I'm going to say, good luck to you. Trade wisely, trade with common sense, and always, always, always mitigate your risk. I'm Martha Stokes, and that's the topic for today.